donated property. So when you're cost sharing a donated property, you have to add a value to it. Now, the valuation has also got some rules, it needs to follow certain rules per federal guidelines. You have to look at the remaining life of the property, the value of the remaining life of the property, look at the current fair market value, and whichever is lesser is the value of the property that you can cost share. Volunteer services by third-party professionals. So how would you put a value to the volunteer services? Look at the normal rates for those services, the market rates, and add a value to that. Services of employees from other institutions, their salaries, their benefits, and if they have overhead, add up all together, and that's your value for the in-kind cost sharing. And again, equipment, research supplies, they're all assessed at the fair market value at the time of donation. So you can use that value and say that, okay, so this particular equipment, the current fair market value is 10,000, but when it was donated, it was 15,000. I'm going to do 15,000 as cost sharing. And so that's your in-kind contribution. The fair market value of goods and services must be documented. Oh, that is very important. Whichever way you assess the value of any kind of in-kind contribution, you have to have proper documentation.
And you also have to make sure it's consistently applied.
Absolutely.
So that's why you partner with your central offices, because whatever you are using for your accounting methodology to book the fair market value, everybody else at your institution is consistently using that same methodology. And sometimes that's difficult for faculty to understand, especially around donated equipment, because they have relationships that have caused an event, and so there's a little bit of emotion attached to it. You want total transparency as you're building it, especially if there are reporting requirements back out to the agency. So I had a situation where we had there were federal funds flowed through a private company, and they had substantial cost-sharing requirements. And in setting up the cost-sharing grid as to what costs would be direct charge to the funding and what would be cost sharing, we actually went back to the federal agency, which was the DOD in this case, and made sure that they understood how we were accounting for the cost share. So we went back to the agency who we were contracting with, but we also went back to the federal. So we went fully back up the food chain, so to speak, to make sure everybody agreed with using the fringe rates, with using the indirect cost rates, with how we valued the equipment and so on.
Right, and also when your PI is submitting the proposal to the agency and he or she is including cost sharing, third-party cost sharing, you have to include some kind of a budget or letter of intent from the third party who is willing to cost share with the PI. So in that letter, probably there should be a breakdown of, we are going to use this technical person at this salary and benefits and overhead.
Yeah, make sure to go that extra step and get that documentation, because that will cover you. And sometimes, our faculty are very well intentioned, but we're also here to help save them from themselves, because they will go form agreements or relationships. But when you get to the actual business people, those of us in the room that are involved in these, it becomes very different, because faculty to faculty, if you think of your faculty reaching out to their program director, they have different conversations than when we reach out to the grants management specialist. It's the same form of relationship.